All right, well, fintech company Chime rolling out a new premium card offering cash back along with perks like fee-free overdraft protection, early access to pay, and access to exclusive Chime deals and more. The company made a strong debut on June 12th when it went public, but the stock has been under a little bit of pressure since then, as you can see on that chart right there. But joining me exclusively is Chime CEO and co-founder Chris Britt from Communicopia. Chris, it's great to be with you today.
Thanks for having me.
All right, so let's start right here with this credit card, this new offering. What does it bring to the marketplace, and what does it mean for your customer base?
We're really excited about the launch of Chime Card, which is just going to make the existing Chime banking services even more rewarding. So it's built upon all the great things that you highlighted, such as helping members avoid fees, get access to short-term liquidity on demand, the opportunity to build credit easily just with their everyday purchases, high-yield savings, and now the ability to earn 1.5% cash back on all of your everyday transactions. And it actually comes with an optional titanium card, which I think is apropos given the Apple titanium iPhone Air that just came out, titanium version. So this would match perfectly with that, I think.
Oh, there you go. New products from Apple, new products from Chime.
That's right.
Direct deposit is really the backbone of your business. How does that flywheel continue to grow with an offering like this?
Well, I think that's the unique differentiation of Chime relative to many other companies in this sector. It's this deep relationship we have with our members that are predominantly using us as a primary bank account. To give you a sense for that, our average customer does 55 transactions a month. So with our card or just P2P transactions and other money movement transactions. So we have an incredibly deep relationship with our members. And that allows us to essentially have a platform service. When we launch new products and services, they get adopted at extremely high rates, such as our recent MyPay launch that we now have about 30% of our members using our ability to get access to your paycheck on demand at any point in time over the course of their pay cycle. So we expect to have similarly very high engagement with this new product as well as future products that will layer on over time to drive this deep, engaged primary account relationship.
You're in a very unique position because you're very, very focused on middle income and lower income consumers here in the U.S. What are you seeing from the activity and from the data at Chime?
Well, we're obviously monitoring all of the data and the unemployment reports and all the changes to that. I think at the end of the day, the economy is still essentially at full employment, and that's what we see in our data. We still see a very robust spending and transaction activity happening from our cards. We see our direct depositors spending incrementally more year over year on a per customer basis. And so, we haven't seen any disruptions. We haven't seen any uptick in unemployment benefits payments or the sorts of things that we, sort of uniquely see because of this deep primary account relationship that we enjoy.
Yeah, and you've said in the past that you're not necessarily as exposed to credit cycles either. I guess that being said, what are you seeing in terms of where we are in this cycle?
Yeah, that's right. I mean, we, because of this primary account relationship, most of the spend that we see from our cards, which is how we generate most of our revenue from interchange when cards get used for everyday purchases, most of our spending is for non-discretionary spending. So even in more challenging economic times, people continue to use Chime accounts. We saw it during COVID. They got their stimmy payments into the Chime account or unemployment benefits. And then when they get their next job, they sign up for direct deposit again, and they use it for everyday transactions. So, it's tough to say where we are in the cycle. It seems like there is a little bit more pressure. And maybe there is some inflation that's picking up. But even on the inflation side, modest amounts of inflation is actually good for the business because we're primarily a payments-driven business. So it's a very resilient relationship and business model that we have because of that deep relationship.
And you just talked about payments. I mean, payments revenue really a focus for you, not necessarily net interest margin the way some of the bigger banks are.
That's right.
That being said, how do rate cuts from the Fed factor in here?
Well, rate cuts don't affect us as much as it would a bank. Again, we are a technology company that partners with banks that holds the deposits of our members. And what you'll see at big banks when interest rates come down is they'll reduce their relatively low rates that they pay on savings accounts today. So I think that'll probably make our offering even more competitive, again, because we're primarily a payments business rather than a heavy lending business.
So quickly then, AI, big topic here, as to be expected. How are you thinking about it?
I mean, we're at an incredible moment in time. There's so much hype and for good reason for, the frontier AI companies, the LLMs, the chip companies, and it's incredibly exciting, this AI fuel that they're providing for industry to innovate. And I think, in the same way that in the industrial age, a lot of attention went to the companies that created the energy, the steam companies, the coal companies, and so forth. The winners were also the companies that harnessed this energy source, this new energy source, and created new innovations and new industries. And that's how we're looking at it as Chime, not just to create more efficient services, which we've already reported on the tremendous efficiency and operating leverage from using AI for customer service and that sort of thing. But we're really excited about the opportunity to use AI to make even better consumer experiences. Imagine an application in your pocket that could give you advice on what to spend, what you should do less spending on, how to improve your credit score, how to think about long-term investing. We envision a world where Chime plays a very significant role in that. And we think we're uniquely positioned to do that because of this deep relationship we have and the data advantage from that.